As we can see, the world is poised to spew racist rhetoric about some of the things that are happening in the economy, most notably the cutting of federal assistance, SNAP, food benefits. Everybody's been going crazy on the internet about this, namely pointing to the effect that it will have on the African American community and the African American reality in this country, and also the effect that it'll have on minorities and low-income communities. But what we want to actually do is look at the financial implications on a wider scale and understand that this is not something that is going to single-handedly affect the minority community, but this is something that is going to affect the overall economy, which is already facing some terrible volatility. So if we look at this from an economic state, cuts to social safety net programs and community investments affect the entire community, not just low-income population. And this is due to the economic multiplier effect. Job loss, number one. Cutting programs like SNAP and Medicaid can lead to the loss of over 1 million jobs across healthcare, food industries, and other sectors, which drives up the national unemployment rate. Now, these are all potential things that take place when we cut these social safety net programs. And so understand, while we see certain individuals rejoicing about this, it's going to have a permeating effect in the economy. Okay, the next thing is GDP contraction. Studies show that state gross domestic product will fall by more than the federal savings gained from the funding cuts, because the reduced consumer spending ripples through the economy. So we'll do more damage than good in the long run. Local revenue drops. Grocers and local businesses that rely on this federal spending will see revenues plummet. So grocers and local businesses that rely on federal spending will see revenues plummet, and this will lead to store closures and a loss of state and local tax revenue. Okay? So then ultimately, what does this affect? Public services. You're going to see your public services eroded and disappear. Okay? So of course, everybody wants to make this all about race, but it's deeper than that. We're talking about the collapse of an economy. What we have to understand is the likely outcome when stores lose significant revenue from SNAP cuts, especially with already slim profit margins and high operational costs due to inflation. They will have to raise prices for all customers or close down entirely to make up the difference. And this would compound the financial pressure on everybody, including those no longer receiving benefits. Okay? So we're going to be looking at something that is going to affect everybody. So don't get tricked. Okay? And don't get gassed up on all this race stuff, but look at the economy with the mind of business. Okay? We're talking about a 10 to 14% share of grocery sales that come from SNAP benefits. And this represents a powerful economic impact. And its removal would very likely cause financial difficulties, especially for retailers in low-income areas. And these are the ones that are going to be the most heavily reliant on those sales. The $1.54 billion boost to the national GDP for every $1 billion in SNAP benefits spent also highlights the program's substantial role as an economic stabilizer. Okay? So these are things that stabilize the community for us all. Okay? And they are part of the Commonwealth. So if we lose these social safety net programs, we will be experiencing the loss of an automatic economic stabilizer, because the social safety net programs like unemployment insurance, food assistance, Medicaid, these are all considered automatic stabilizers in an economy. So let's look at how they stabilize. During a recession, these programs automatically increase in enrollment and spending as people lose their jobs and income. Now, this increased spending acts as a critical floor for consumer demand. So the effect of cutting them is when you cut these programs, it reduces demand at the precise moment it's needed the most, accelerating the economic contraction and potentially pushing a recession into a collapse by reducing the public's ability to spend money on basic necessities. So this is going to have an overreaching effect. And that's what we need to be looking at. So let's take a look at the key projections from recent economic analysis regarding proposed cuts to major safety net programs. So the economic projections of safety net cuts look like 1 to 1.2 million jobs lost nationwide, 113 billion to 154 billion in decline in the state's gross domestic product in a single year. Okay, a 0.8% point increase in the national unemployment rate. Okay, so we're looking at more unemployment and a loss of gross domestic product. Okay, 9 billion to 12 billion reduction in state and local tax revenues. Okay, those are the tax revenues that pay for your public services. So we're looking at the economic loss being greater than federal savings as the final metric. Now, what is the reason for all of this? Well, we know that these programs are spending multipliers. Economists estimate that for every dollar spent on programs like SNAP, there is $1.40 to $1.80 increase in total economic activity, GDP. The negative effect? When you cut $1 of this highly efficient spending, the local economy loses not just that dollar, but the additional economic activity that it would have generated. This is why cutting the programs causes a massive ripple of job losses across sectors that are not just in social services and a decline in overall GDP. In essence, these projections actually illustrate to us that while the state goal of cutting the safety net is often fiscal austerity, the ultimate effect is a contraction of the economy due to the removal of a crucial component, the consumer demand. So research frequently supports the view that cutting social programs is destructive in the long term because it lowers GDP, reduces tax revenues due to job loss and wage loss, and it creates greater social costs that ultimately undermine economic stability, which is supposed to be the goal. So now we're working and hustling backwards in America. So let's look at the effect that it will have on non-minority workers, okay, and white people. And we just want to say non-minority in that respect. But we know we're dealing with specific demographics when we're talking about America. So it's a critical point that social service cuts can have a boomerang effect, worsening the economy and pushing previous stable workers, including the white majority of social service employees, which we know they make up about 60%, into poverty and need. Since white workers hold the largest absolute numbers of these jobs, they would face the most direct job losses, potentially turning middle-class stability into a need for the very safety net programs that have been dismantled and that are being dismantled. Furthermore, public sector historically offer better wages and benefits, making their loss more damaging to the middle class economic security across all demographics. So we can stop looking at this just as a race thing now and start looking at this with some common sense. Everybody's ass is in the pot cooking. So let's paint a scenario that is probable when these type of big cuts and financial losses come into the economy, because these are financial losses, believe it or not, for everybody. So these cuts to the minority population, to the social welfare programs and safety nets, these then cause widespread job losses and resulting loan defaults, car, house, and credit card, and sharp reduction in consumer demand among a majority population segment. This will create a severe downward economic spiral, and this will potentially lead to a catastrophic recession or depression. See, that's how we should be looking at it. How is it going to affect all of us, and how that is going to affect the sum total of our situation? Okay, so let's break down these effects. Okay, financial contagion and credit crunch. So when the loans default, mass defaults on mortgages and auto loans will significantly destabilize financial institutions, mirroring the aspects of the 2008 financial crisis. Banks face massive losses on safe assets, which may lead to tighter lending standards, the credit crunch, making it harder for both businesses and consumers to get loans. Okay, so this is going to further intensify the problem. And then this potentially triggers asset devaluation. A wave of foreclosures and repossessions would flood the market, causing home and vehicle prices to drop, destroying household wealth, and making debt recovery harder for lenders. And this potentially triggers a collapse in consumer demand and business revenue. And this creates a demand shock. Consumer spending is the largest component of the United States GDP, so jobless and indebted middle-class citizens must drastically cut back on both their discretionary and non-discretionary spending, which leads to what? Business failure. Reduced demand translates directly into a cratering revenue for businesses. Companies no longer guarantee the market. They have to absorb all of their operational costs, taxes, and the tariffs with no incoming sales, leading to lower profits, hands down. In which case we can expect further layoffs, hiring freezes, and bankruptcies. And this is just going to accelerate the job loss demand spiral. Cyclical unemployment is what we get from that. Okay, so systemic inability for all classes is what we're looking at. Middle class erosion. Financial insecurity stunts human capital development, and it leads to reliance on short-term coping mechanisms like borrowing and creating long-term instability. Now for the part that nobody seems to want to focus on, and that's the risks for the very wealthy. Even the wealthiest individuals and large businesses are not going to be immune, as their investments, business ventures, stock portfolios all depend on a functioning consumer economy. When the majority stops buying, the entire system of profit and wealth generation breaks down. And this is going to lead to insecurity and instability at the top of the socioeconomic ladder. This is some food for thought.